The Big Picture. Not long after this book first appeared in 1978, the U.S. financial tide ebbed. Stock and bond prices hit rock bottom, the result of sky-high inflation and interest rates. And so did our national debt, relative to the size of the economy as a whole. Investing over the next 3 decades, as difficult as it surely seemed at times, was actually deceptively easy, as the tide just kept coming in. Now we're in, roughly, vaguely, the opposite situation. Very low inflation, very low interest rates, and an uncomfortably high national debt, making the years ahead a particular challenge. Understanding that challenge, seeing the big picture, will help you put events and decisions in context. Take a minute to consider the national debt and interest rates. Then another minute to consider the good stuff. National debt. In 1980, the national debt, which had peaked at 121% of gross domestic product in 1946 as a consequence of the need to borrow whatever it took to win World War II, had been worked back down to 30%. It's not that we repaid any of it, just that the economy gradually grew to dwarf it. Whether for a family or a business, or, in this case, a nation, having a low debt ratio is healthy. It gives you wiggle room if you ever run into trouble, like a recession, and need to borrow. Indeed, that had long been the big idea, that in bad times, governments should lean into the wind and run deficits, borrowing to boost demand and ease the pain while excess business inventories were gradually worked down. And then, in good times, not borrow much, or even run a surplus, to build borrowing capacity back up. Yet in the mostly good years since 1980, our national debt has ballooned. From 30%, when the Reagan-Bush team took over, it topped 100% in the fiscal year George W. Bush passed it on to his successor. Only between Bush Sr. and Jr. was the annual deficit tamed, as Clinton handed off what Fortune called surpluses as far as the eye could see. Although the deficit has once again been tamed as of this writing, meaning that the national debt is once again growing more slowly than the economy as a whole, the wiggle room is largely gone.